Today we're going to talk with Dr. Ryan Phipps, dentist from Bowling Green, Ohio, regarding his experience as an investor with Rust Belt Capital. Okay, Ryan, tell us a little bit about yourself. What's your background?
I'm a dentist from Bowling Green, Ohio. I work where I was raised. I like living and working in a small community. I think it gives us an opportunity to get engaged with a lot of things that go on. That's me.
Where'd you go to school?
Went to undergraduate school at Miami University. I attained a Bachelor of the Arts from Miami, and then I got a Master in Biology from Bowling Green State University, and then a Doctor of Dental Surgery from Ohio State. Then went on to a residency program at Miami Valley Hospital in Dayton. So I was all around the state for a while, and 10 years of college altogether. But it was good to finally actually work. But I had loans on top of loans on top of loans, as I'm sure you're aware. And so besides that and buying my business, there was a long period of time where I didn't have a chance to invest money. And I was just doing what I thought was the responsible thing, which was paying down my loans. And at the time it was, because the rates I was borrowing at before I consolidated were pretty close to like 7%, right? Wow. So you have to look at the fact that my dental school loans were more than my house that I purchased at the time. Being able to pay that off in about 7 years was like a major big deal for me. But now I don't have those loans. And I've also paid off my practice loan, which is the largest loan I've ever taken out. Now I have a little bit of freedom to use that income that I had for years always had to dedicate to loans, to investments, and start looking forward to figuring out how I'm going to finally retire. So
investing in your personal capital and your education, which that's what makes it all the money.
I was lucky that I did so much on the front end, and I understood at that time that it was going to be worth it. And it was certainly difficult. I wasn't making money while I was in school. I was hemorrhaging money. I was borrowing at a high interest rate, right? And so I was hoping and relying on the fact that my career later would be able to afford the make it worth it.
So why did you decide to become a dentist?
Well, one, I like working with my hands, right? Like I'm a natural artist, and I like tinkering with things. I'm always taking things apart and putting them back together, and I like dealing with people, and so it's a natural fit. I was always good at math and science, and so I did well in those classes, it ended up being kind of just a perfect amalgamation of the skills that I have. I enjoy it. And like I said before, I work in my own community. I'm treating family members, friends, and I've met a lot of families and gotten to know the several generations over the last 13 years of practice. So for me, it's been just eternally rewarding, like not just on the financial side, but more so just the feeling of accomplishment through the work that I do.
Investing in people and your kids. And
absolutely.
Kids grow.
Yeah. I mean, and we belong to an industry where there's a lot of corporate dental offices and people who are doing it for the wrong reasons. And what we found is that by not focusing on financial things at all and just doing good treatment with patients that trust us and that we have good relationships with patients, it just rewards itself, and the financial end takes care of itself. Just by doing the right thing.
So just focus on providing just an outstanding product.
And absolutely.
Trusting in that. And
absolutely.
The finances pretty much figured. You gotta be smart, but
it's an honest industry if you do it right.
So why do you want to own your own private practice instead of...
So that's super important. That way I have control. What happens now in our industry is that there's corporations where people who aren't dentists are making decisions about how much money should be made each day in practice, which is unethical, right? And so,
the healthcare board.
It does. And so if someone was to tell me like, oh, hey, you need to, need to make $4,000 extra today. You wouldn't want to be my last patient in the schedule. No, I don't have to do that. I get to make all my own decisions. I get to pick my own staff. I get to, I run a business. I have over 20 employees. We provide healthcare. We have a profit sharing plan. We do a lot of things. I mean, we are a family grown business where we have employees who have been there for more than 40 years.
Wow.
Right. And so, yeah, I mean, we retain employees for a long period of time. Our hygienists have been there before we just added our fifth one at a minimum of like 15 years. So
That's crazy.
Yeah. It's good.
That's crazy.
Yeah.
And so why'd you decide to you purchased your business, right?
I did. And so
Why'd you do that instead of just start it from scratch?
Well, so starting from scratch is scary with anything. But when there's a lot of different business models for how to begin a dentist office, the best business model is to incorporate yourself into an already successful practice. And then you're purchasing goodwill and a patient base, which is the most important revenue that comes into any medical or dental practice. And so I could have started a new office. I would have had to take out loans with a lot of uncertainty, right? But I did my homework.
Yeah, building a client base or book of business from scratch.
It's not easy.
Oh my gosh, that is incredibly
I have
difficult.
friends who have done it, and the first years are very lean. But no, there's something to be said for the way I did it. And that, I didn't, like I said, I didn't have money to invest for the first 8 years that I was practicing, just because I was paying
you're
loans.
investing in your own business.
Yeah.
In yourself.
In myself, yeah. I still go to continuing education. I spend a lot of money on that. I spend more than $10,000 a year going out to Arizona and continuing into special dental education. I'm actually headed out there in 2 weeks to make sure that I'm not only providing what would be like a base level of care, that I'm actually an expert in the kind of prosthodontic delivery that I do. So
investing in your product again.
Mm-hmm. Yeah. No, I mean, basically I'm my own product, right? I'm just continually investing in myself so that I stay more than relevant.
Honestly, that's the number one best investment that I think anybody can make is themselves and the business. Especially, we have a lot of business owners, is your business should be the first place that you look to invest before you do anything else, or yourself. And then after you get outside of that, then talk about other things. But
yeah, we have a lot of dentists who in online chat groups talk about side hustles, and it's like,
Why?
yeah, your most important hours are, in your own office. So you shouldn't be focusing too much on a side hustle, which, as why I like having people who understand other industries better than I do, that I don't have to take a deep dive into. I've even read all the books that you've suggested, and it's given me a fundamental understanding of investing and different opportunities, but it still doesn't give me confidence that I'm doing the right thing, because I'm not in the trenches doing it every day, right? There's no experience there. So
some of those books I gave you are they're very intense. It seems like very. I gave you the Intelligent Investor, Security Analysis, stuff like that.
Yeah.
It's, first of all, it's written by somebody 80 years ago, so they kind of speak a little bit older-fashioned English, and it's very intricate. So it's not a casual read.
No,
But you actually followed through and read that.
Well, I read some of those books, but I did. I took a deep dive into it about a year ago, and what I realized, they all said the same thing, is don't buy individual stocks, right? and then don't invest in yourself. Do what you know what you're doing, and don't make foolish decisions. So.
Yeah. So as you start looking towards other investments outside of your business and yourself and the services that you provide to your customers, your clients, what about us or the investments that we offer were appealing to you?
So the most appealing thing is just the investment diversity, right? I play a very boring long view stock market retirement game, just because that's what the books tell me to do. Right. There should be nothing sexy about investing, right? So just do it the right way, right? Play the long game, rely on the market, okay, over a long period of time, rely on capitalism. But then there's also only so many qualified investments that I can make, and then I have to start making decisions outside of that if I'm going to start making unqualified investments where I'm going to get taxed on some of these dollars. Does it make sense to also put money into a market that is not directly aligned with the stock market, right? And so I like that diversity. I like feeling like at least if something happens where we have a stagnant market or worse, you know, over the next 10 years, that I may still able to make progress in an area that it probably won't change. I mean, unless we have a ton of people leave Bowling Green because of like a toxic spill or something, people are gonna need a place to live, you know? They're gonna want a reliable place to live, you know? And it's something everybody needs, so it's not going away.
Yeah. And what was I going to say? Oh, like, I think we had a conversation about this maybe a year ago. I sent out an email, and it was, hey, maybe your financial advisor doesn't say this or whatever, guys, but there's actually been periods of times where the S&P 500 hasn't made any money for like a decade or more.
Yes.
And then when you start doing adjustments for inflation, for example, the last 4 years, even if you're invested in the S&P 500, once you take out inflation, you're compounding your money at less than 7%. I think it's less than 6% the last 4 years.
Yeah.
And so you're only relying on capital appreciation when you invest in the stock market, because the dividend off the S&P 500 is like 1.43%, right? That's nominal. But if you invest with us, even if we can't get any appreciation, I mean, we're still writing checks that are 7, 8, 9% cash dividend.
Those have been nice. Yeah, I've enjoyed those.
And like, that's our goal. Like, that's why I got into this stuff, is for the cash flow, is because I know, just like you, I know in my ability that yes, I can go out and I can pick stocks that are going to outperform the market. I'm very confident I can do that, and I've done that. But the problem is, you get no tax benefits with it.
Right.
Okay, and then I have to sell in order to make money off of it, and I have no cash flow in the meantime. Okay, so what happens if I invest in a company that I really believe in, but it takes some time for it to actually go up?
You're stuck.
You're stuck. You're not making anything.
And not to mention that it takes some sophistication, and not everybody can make that analysis and make it well.
No, it's to be really good at doing, security analysis. I mean, you're talking like an investment banker type background.
Well, they don't always win.
Sophistication. Those guys don't always win.
Right.
Yeah.
So can you tell us the story of the first investment we brought to you and what your thoughts were on it? Like, what are these guys doing? And then
Vandelay.
Yeah.
Right? I remember everyone said, this guy's young, but he knows what he's talking about. And Nate, who's a friend of mine, vouched for you. So I said, I'll listen. And it was, I could tell you were smart when we had those first calls, and that you had kind of paid attention to this, and you were making a significant investment on your own end, even being young, that you kind of threw everything into it. And so that gave me confidence that if you were willing to do that, because if it didn't work, it would have been quite a financial blow to you.
One of our strategies, and for multiple reasons, is that we invest in every project that we do.
It always is, and whether or not it's actually legitimate, I suppose is up for debate. But whenever I've gotten into a deal like this, the person that I'm entering the deal with, I want to make sure has skin in the game, because I'm not paying attention to the minutia, and I don't want to. And so I want to know that the person who is in charge of these deals is subject to lose as much as me or more, and that just gives me more confidence that that you guys are taking care of this. Yeah.
And then you hear that I'm putting money into this deal.
Mm-hmm.
What outside of that was like, okay, this is an investment worth making?
So you you broke down the important figures into something that I could understand and make sense of and weigh against other ways that I might have invested that money. And for me, it was good to be able to see that. I understand that it's just a pro forma and that not everything is always going to meet that. I think we beat the we're outperforming the pro forma by quite a bit, which is excellent. But you didn't try to sell it as this thing that's going to get me rich quick, which I appreciated. But I could tell that you had done your research on this, and you were energetic about it, and I felt pretty good about getting involved with it. I mean, I got involved at a fairly high level for the first time with you guys, but it's paid nothing but
Actual dividends.
actual dividends.
Yeah. So you would say it's turned out well above your expectations?
Yes. I mean,
or-
like I said before, I have investments with other multifamily real estate entities, and they don't come close. So,
Would you be comfortable if Rust Belt expanded? Our footprint is fairly local at the moment, but generally in the Midwest. Would you have a geographic limit? Or
not with Rust Belt, just because I think that you've proven that you're going to do your due diligence and you're going to take care of management. And I think that, because you guys are still building your book of business, that you're going to make sure that the investments that you make are going to hopefully be the right ones at first, and not just jump on the next opportunity.
Yeah, that's actually a really good point. Is like, there's a lot of people, we go to conferences, Salt Lake City, all over the place, talking to other operators and stuff like that. And you see some of these companies that scale super fast. And some of these companies are really good. Rise 48 is one that people know a lot about. Lone Star Capital is another one that people know a lot about. I think the guys at Lone Star Capital do a good job. But they scale so fast. And there's value in that, but our approach at first is we really want to make sure that we have all of our systems and operations and everything buttoned up super well, and that we really understand everything in our portfolio. We build a core base really close to home that is basically just a cash ATM, producing money for our investors. Our investors are getting paid, and they're happy with that before we try to scale. Because we could start talking to family offices and stuff like that and go scale to thousands of units a lot quicker. But that's part of our risk-averse strategy. We're putting our own money in these deals, and I want to be able to sit across the table from you and be like, Ryan, you trusted us and we came through for you, and I want you to be happy with what you're actually getting. And if you're not happy, then that's not a win for us.
Yeah.
So.
No, I feel like that's definitely there.
What concerns do you have, either with, open it up broad, either with Rust Belt and our operation, or the broader economy? Anything out there that's snagging at you?
So yeah, obviously right now, with any large purchase, I worry about what interest rate is going to affect my investment. So when interest rates were lower, I felt like most of my money is not going to be tied up into the loan, that it's going to be tied up into the physical portion that I would be able to make more money off of. Mm-hmm. And so I was worried currently that we're looking at higher interest rates and possibly higher interest rates for the future.
Okay. So higher interest rates for the future, you're worried on what your returns look like and return profile?
I'm more concerned with how does the next investment stack up against the investments I made in 2021?
Yeah. Well, I think we talked about that a little bit. It's like we're in a position where interest rates can only help us. If they go higher, that helps us, and if they go lower, that helps us, and it helps us from a couple different venues. So if interest rates stay where they are, which is high relative to the recent history, okay, that makes the cost of home ownership very expensive for people, forcing them into being renters, which increases demand relative to supply. So that actually increases our ability, our pricing power on the units that we have available to people. And so like in Bowling Green, okay, maybe 4 or 5 years ago, there are houses that were less than $200,000.
Today.
Okay, you're not going to buy a house that's less than $300,000 today. And what does that do on a monthly mortgage payment, especially with the interest rates? So you have less supply on the houses, and then your interest rates are higher, your mortgage rates go up, or your mortgage payments go up. So if your option is, hey, I can spend $2,500, $3,000 a month to own my house, or I can go rent an apartment from Rust Belt, and it's $1,000 a month, and it's a 1,000 square foot apartment. It's been remodeled. It's 2 bedrooms, 2 baths. I have storage, locker, parking, all that type of stuff, all the maintenance taken care of. Even if you want to own the home, you might have to have this option. And so if you can't afford the home, now you're stuck in this option. We want to make sure that our product is the best product in our local market so that ours is the most demanded. Takes our turnover times down and stuff like that. So interest rates staying high help us. From an acquisition standpoint, higher interest rates help us as well, because there's a lot of people that, in commercial real estate, it's not like a home loan where your interest rate's fixed for 30 years. Typically, your interest rate's fixed for 5. Now, when we take on properties, we make sure that we're getting 7 or 10-year fixed rate periods. And the reason we do that is really strategic, because we start amortizing the debt down, and the number 7 typically allows us to get to an inflection point to where interest rates become less and less and less challenging to us if they go higher, because we've paid down so much debt. But to our competition that have their interest rates turn over, now they're in a position where the value of the property is going down because interest rates are going up. So we're paying less per door than we would have paid for the properties when interest rates were 4%. And they might be in a situation where they don't have the decision to hold on.
They might not.
They kind of
We've seen a lot of that.
Yeah, we've seen a lot of that. And then it allows us to be way more selective. Like, okay, we like this property, but we don't like it at this price. So we'll give you this. They don't like it, okay, we'll walk. But they've got a ticking time bomb against them that they have to eventually sell. And then if interest rates go down. So if we buy properties today at 8% interest and we fix them and fix the interest rate, okay, 2 years from now, if we could make money at 8%, think if we can make money at 6%, we can make a lot more. The last deal we did, it's every 100 basis points that interest rates drop, our cash on cash return goes up by 2.5%. Yep. And so I think our pro forma on that is we were expected to pay out to investors 5% out of the gate. We ended up paying 7% on our first payment. So we've got plenty of gas in the tank there too. So that's what gets me excited more so than anything right now. Is I'm like, Nate, we've got a good opportunity.
And there really is, with the current operators being pinched by adjustable rates and they're losing. And I've been approached by several of our investors and others that, hey, I've had this investment with this real estate company, others, not us, and they used to be paying me 8-10%. Now I'm getting nothing. And why is that? Well, the interest rate adjusts and they all get their dividends eaten up. That's where we love to secure long-term fixed financing as part of it. It really comes down to the acquisition and getting that acquisition right. Sure, you want to get a good price. No question there. Obviously, the price is important, but there's so many other factors with what that interest rate is, the length of time that is fixed. And if you factor that all in at the acquisition and build out the numbers from there, you can really use it to our advantage. And that's the position we want to be in.
Yeah, there's a lot of, when I go to those conferences last year, I went out to Salt Lake City to the best ever conference. And for the most part, the people who are there are legit operators. The people have portfolios that, small ends 50 million, high ends 3.5 billion, okay? Huge portfolios. And they're like, there's a lot of people, a lot of syndicators especially, who scaled too quick, and they're underwater, and they might not know it. Mm-hmm. And then I see emails every week, every day, of these properties that are in distress, or they bring them out, and they try to sell them, and they don't sell. And then you look at what they've invested into it and you're like, okay, this works in a 4% market for interest rates, but 8%, like, now you're in trouble. And the last thing I ever want is to call Ryan up and be like, dude, we messed up and we lost your money. Like, that's the last thing.
Well, I'm assured that you won't do that.
Have you ever thought about, or maybe in the past before you got in with us or others, about owning your own residential real estate, doing your own thing?
It does not appeal to me because, as we were speaking about earlier, my time is always best used treating my patients.
Yeah.
And if I'm not doing that, then I'm trying to look into rewarding hobbies and things that I like to do that kind of help me de-stress from the time that I do spend in the office. So there's no part of me that wants to put in a lot of hours trying to make money at anything beyond my career.
Sure.
Yeah, I'd rather spend that time with my family.
Time, that's what it is.
Golfing.
Yes.
So,
Sure.
so no, that's why going with a company like Rust Belt makes sense for me, because I want to, I'm not screwing in light bulbs or,
You don't like to fix toilets?
yeah, I don't want to fix toilets. No, I prefer to just hear from you quarterly. So,
Yeah. How do you like our communication?
it's good. Yeah, your YouTube videos I like. I watch them.
Are those helpful?
Yeah, honestly. The one where you kind of explain your single family home compared to multifamily homes, I like that. You keep them short and sweet. With any YouTube video, we don't need like a 4-minute primer, and when we're trying to get to the 30-second nut on why we're actually clicking on it. So I appreciate when you stick to what's important. The casual investor like me understands maybe a quarter of what you guys actually know about this market, right? And as much as I could educate myself, now I'm spending a lot of time on something that, it's starting to feel like a job. So like we talked about earlier, I want to understand just enough to know whether or not it's a good investment, and then trust the people I work with to continue that investment for me. And you do a good job with, the emails and the communication telling me why our properties are successful. So
That's good. That's good. So you said you're on these forums, right?
Mm-hmm.
These Facebook forums, and you talk to a lot of other people in your industry and
Yep.
dentistry, and they're looking for side hustles. Why is that?
So I told you before, I was very fortunate for where I practice to be able to stay as busy as I want to be, right? It's not the case with a lot of dentists or doctors in larger cities. There's a lot more competition. And so while they probably put in even more because those larger city markets cost more to start an office, they don't have the patient base or the relationship with a small community of patients that we're lucky to have. And so they have a little bit more free time, and they might not be as dedicated to the craft. And so they're more interested in making money rather than focusing on what their strengths could be, right? And so, yeah, a lot of people are looking for side hustles. Our industry is one that, if done successfully, can generate quite a bit of profit. And so there's opportunities to invest that money in other things beyond retirement.
So what would your recommendation or suggestion be to people like that? I mean, you've got a lot of experience and a lot of knowledge in this. You're not only a dentist, but you're a business owner, a successful entrepreneur. Like, if I'm a struggling dentist, or maybe I'm not struggling, but I'm not making as much money as I want to.
It's always invest in yourself, If your heart's in it, if you truly like to do this type of work, then you need to learn as much as possible. And be true to yourself and your patients, and the money will follow. There's no magic potion that I know that exists out there to get rich quick. Yeah. And it's going to take hard work, and it's going to take years. And you put so much into it that you wonder what's the money for anyways, right? Like we're at the end of it, we want to enjoy what we do during the day. And we want to feel financially secure. We want to make sure that our kids are taken care of. And if you have that, then everything else is fine. And you realize that maybe you don't need to focus on money as much, right? But there's a lot of uncertainty with retirement. I didn't start contributing to my retirement until I was well into my 30s, to my mid or late 30s, which is late. I didn't have compounding interest starting in my mid to late 20s because I wasn't making income, right? Or I had too much debt. So I have to make up for lost time. So I have to responsibly look for a couple other ways to help make sure that I can retire when I'm 60 or 70.
What is retirement? Number one, what's retirement look like for you? Like, what would you like to look like, or what age would you like to start at? And then number two, I mean, your business is an asset that you've been investing in quite a bit. Does selling that business, is that in the cards for you in terms of like that's something that you're thinking about to fund your retirement, or you want to pass that to your kids?
So that's a really funny concept and something that's very like top of mind right now. In our environment, there are a lot of what's called a DSO, which is a corporate entity, who are buying practices at 4 to 7 times what that practice might be worth. Okay, so that they can acquire those practices early, build them into their larger business, and then if I would sell my practice, I would make a windfall early on, and I could potentially invest that money early. But then I lose everything I care about, right? Like just like I was just talking about, I want to do what I want to do for the next 30 years, and I want to do it my way, and I want to make sure that I have control over what I want to have control over, all right? So while I could sell my practice and then sell everything I care about, I could make a ton of money and probably not have to worry about money as much or some of these other decisions. I wouldn't be doing what I want to do. And so it's more important for me to be in control of my business.
And that's why you choose not to sell to basically like a private equity that's doing a roll up.
Yeah, absolutely. And even, I mean, I have a lot of patients who are retired. And what I've learned is that I'm going to have to do something in retirement to stay sharp. And so I will probably continue working as long as the state allows me to at some capacity, even if it's eventually my goal is to do OR dentistry. There's reasons why I can't really do that now. But there's to stay sharp, to continue being useful to our community and to Earth in general, right? Like you can't just play golf every day. You have to, I think you kind of have to ply your trade or stay interested in something, or give back in a certain way. So if I'm smart about it, I'm not just gonna put down the handpiece. I'm just gonna figure out a way that's less stressful to do it.
Yeah, it's
as long as I can.
Your business, and maybe you have people working for you or something doing that.
And you'll probably maybe see me in like a Home Depot apron when I'm 80 or something. I have to do something. So yeah.
Yeah. So that's what retirement looks like for you, or
staying busy. Yeah.
You don't want to just check out and go to Florida.
I'm always interested in that, and I just got back from a week-long vacation, and I was excited to get back to work. So
you truly enjoy what you do.
Yeah. Well, I've worked my entire life to do it, and then as much as I needed and love a vacation, I don't want a vacation for the rest of my life. So
no, I'm the same way. That'd drive me crazy.
Yeah,
I couldn't sit there and just.
And everyone I like, every person that I admire that's older, like didn't hang out or hang it up and go into obscurity. Like Warren Buffett's like still relevant, right? Like it's like it's you want to still be relevant and do like even different types of work later in your life, so that you're still doing things and being useful.
Yeah. Not to stay in the house and annoy your wife or anything.
No, and there's a lot of people who are doing that and they're miserable. So,
so that's why you don't sell to those guys. So you have that to do.
Yeah. No, I'm not looking for door number 3 or the easy way out. Like no, I'm firmly vested in this. So
when that, just to be helpful for other people who maybe are getting approached by companies to do that, like say you sell it to one of those private equity firms that is buying and bundling. Do you still have to work there, or how?
Yeah,
how's
you're
that
under
work?
contract to work for them for 3 years minimum. And my understanding is that you're compensated in a fair amount of like stock from that company, which is, if you understand it well, and I don't know how easily you can cash that out. You're riding the wave of how that business, which I expect to burst. I don't think it can be sustained as long as it's not healthy to the individual practitioner.
Makes sense.
Yeah.
And then what do you see happening to like the businesses that do that afterwards? Do they?
Yeah, they lose faith in their patient base because the patient base is now seeing that they're getting diagnosed with things that they haven't heard about 12 years previously, right?
As you mentioned earlier, it's not about patient care, it's more dollar driven.
No, and it's also a revolving door of dentists. Once that 3-year contract's up with the person who sold them the business, they're looking for a bunch of fresh people out of school. Those people have no relationship with the patients either, so how long are they going to stay there if they don't like the way that the business is being run? There's a lot of success stories, but there's some critical failures in the industry as well. And the people who are going to get hurt are the patients, so.
Is that the biggest thing that you see going on in the dental industry right now? Or?
It's hard I'm judging from what I'm reading online, right?
It goes to prove your point. Like you have to be like, to be really successful in anything, you have to be fully invested in it, and you have to know it in an intricate level. Like, I don't know anything about dentistry.
Right.
Okay? I'm not a doctor. I'm not a dentist. I don't know any of that. I can barely brush my teeth. It's okay. I couldn't just buy dental businesses and package them together. I mean, maybe with your help, but like.
Sure.
I understand the business side of it enough that I've already looked into. If I wanted to, could I purchase satellite offices, run them with associates, and make a lot more money? I already know where these locations exist.
Right.
There is a button I can hit and make that work. I have the capital, but I care enough and feel strongly enough about my ethical responsibility to anything that I own to make sure that those patients are under my care that I won't do it. I would be very financially well off if I decided to, but I'm not going to, because it's what I would consider to be the wrong thing to do.
But it comes to the same thing when it comes to investing. Like investing in the projects that we do, we're not buying these properties or these apartment complexes to milk them, like to just not reinvest in them. Like, we want people to actually like where they live. And so you probably wouldn't feel as good about investing with us if we were like, hey, Ryan, we're going to go buy this place and we're going to put zero money into it. We're going to barely do any maintenance on this thing. And we're just going to try to make as much money as possible off this property, even though that's going to work against you because your property is just deteriorating. Like, I don't know, you probably wouldn't feel really good about doing that.
No, I'd feel terrible.
Because you're putting these people in a freaking slum.
Right. Right. No, I like the fact that it's the original investments were close to where we live and work, so that we can make sure and keep an eye on it and make sure that they're headed in the right direction.
Did it matter to you that they were multifamily, or if office or strip centers or anything like that? Do you really care about that very much? Or
I would listen to anything, of course. I suppose that piece is not important to me.
okay.
You guys do a good job. You're building something really fun here. It's it's cool to be see how you guys are building Rust Belt up. I feel good about the direction you're going. So I'm glad to be a part of it. I'm glad I got in early. I look forward to hearing about new opportunities. I trust you guys. So mostly because I also know where you live. Right? And so it's like, you're gonna have to deal with me if we start getting into some rougher seas. So
we have some things in the pipeline potentially, so we'll keep in touch.
Great.
Pipeline. Then would you recommend those to
I have.
other investors?
Yeah.
Always appreciate that. Best compliment we can get.